Hi, and welcome to the Price Action Analyst YouTube channel. I wanted to do a review on gold and silver, just because they're breaking out. So gold's already broken out, but I think it's going to move further to the upside. So particularly with silver, these are good opportunities to get long. Just to give you a bit of context, this is the gold chart. These are daily bars. This is the COVID crisis. Now gold is supposed to go up during a crisis, and overall it has. The best explanation I've heard for it going down, and it when you have crises like the 07-08 financial crises, all assets go down. Gold and silver went down too, and it wasn't until 2009 that silver started its run to $45. And I'm pretty sure gold would have done roughly the same thing. But the best explanation I've heard for the initial fall is people are selling to cover their shorts in to meet margin calls and stuff in their other positions that are going down. So gold went down, but it shot up pretty quickly. And then as the government reacts to these crises by printing money, gold goes up. So, this is a gold price going back to 04. That's roughly about $300 there. Sorry, 450. One of the ways to look at this chart is, this is gold going up, but it's actually the value of the dollar going down. That's not the only explanation, but during these crises now, the government was initially talking about 4 trillion and now they're talking about 10 trillion. So, fundamentally, although that's not the way I trade, I expect gold to go up. And it's the same dynamic with silver. Here's the 07-08. So I guess it did go up, and then it fell. I mean, that was still the crisis, 08 there. And then 09. It wasn't actually till 2010, August 2010, that it started that run up to 48 and change. So, silver is kind of like the crypto reviews I've been doing. It's been consolidating for a long time. It's broken out, pushed back. There was a lot of people talking about, what the investment banks do with the silver price there, because this is a paper price, right? The physical price has always been higher, and right now at 16, 17 bucks, the physical price is, 20, 21 bucks an ounce. So, I think silver has been in a consolidation pattern for a long time, and I believe that we are witnessing the breakout. So I'm going to get into that in more detail here. Let's start with gold first. So now I just wanted to give an overall contextual picture for gold and silver. Like, the government's printing money. Gold's already, this is 2019. It's in an uptrend. You've got a leg consolidation, another breakout. Then it got messy during the COVID stuff, but you've had a strong rise from the bottom of that and a consolidation, and it's now pushing out of that. So this is all taking place in the overall context of gold being in a really long uptrend, because the value of the thing it's measured against, the US dollar, is falling all the time as they print money, and they're ramping up the printing of the money to unprecedented levels. So expect gold to rise, and it is. So here's, out of the COVID, we've had 2 legs up, and then we've had a consolidation pattern. These blue lines, I'm long gold. I have a call debit spread, so it's 160, 450, 165. So that's looking good. And I think I got into that around here, but let's just ignore that for now. So the consolidation pattern that it's formed, you can frame up quite nicely. And the bottom line, you know, this push below the bottom line when it formed the wick would have been a nice long, and also retest of the gap, didn't quite close it, was another good position to get long, and you're inside this wick, you know. And again, you need to, your upward premise is helpful here, because you know it's up, it's consolidating. When it punches below that, you expect it to be a false break. So you know, if you were smart and quick, that wick outside the Bollinger Band would have been an ideal place to get long. And then here. And so the first indications that this was going to push up, you know, here's strength. So you've had a low, and it's tried to come back here and been pushed up, and then a retrace of that. It opened here and pushed up immediately. And this just looks like it's about to pop. And when you get this bar here that gaps up and closes at its high, my expectation is for further upside. And so you're seeing that, seen that. Yes, it's at the Bollinger Band, but I'm, you know, I'm expecting, you know, that is my expectation. So yes, this is happening at the Bollinger Band, but strength, all right, it left a wick, that's bad, but then it tries to push down, it's left a wick, it's opened here, come into this gap, hasn't closed it, and closed up. So I see strength. There's short-term weakness here, but I see strength. And so today, if you were to get long here, you know, there's a little bit of risk here, but I believe that, you know, it could retrace here, and we'll look at the intraday stuff in a second, but it could retrace, but I don't believe you have a lot of downside risk. You know, if it retraces here, I believe your downside risk is kind of, you know, this area here. And there's a good chance that it's not even going to push back this far. Especially if it opens tomorrow, pushes above these highs. I think price is going to move here. So that projection here, before we get into the intraday stuff, that projection's about 185. So if you go back to, yeah, I mean, that puts us at a test of the all-time highs. So I think this is gold. This is gold's move to here, and then, you know, the halfway point between here and here would be the first place that I expect weakness. That's 179.40 roughly, but expect it to test the high. Expect gold's going to test the high. So let's just have a look at the intraday. So here's the breakout here. Well, this is that's the start of today. So that was Friday. You know, the deepest retrace I see would be this trend line, and this air would kind of happen at the same time. So you're talking like 165. I don't think it's going to do that. I think worst case scenario, you get a wash of this pivot, which is at let's call it 166. So 165.80 maybe, which is this 166. So yeah, so you know, if you're getting long and you're getting long by the ETF, that's not a whole bunch of risk. I just, with the upside projection that I expect, you know, if you don't want to, if price pushes away and you're sitting here waiting for a retrace and it never gets back here, you're missing a lot of upside. So, and I'm sure, you know, other people are starting to see this. So, if you were looking for an entry point, so tomorrow, if you get a 10-minute bar that closes above 167, I would even say tomorrow, if it opens and closes above 166.80 and you start seeing bullish bars, 10-minute bars. So, you know, if you start seeing an open and you start seeing stuff like this, I would hop on. If I was looking to get in, I'm already in a long position, but you know, it's 3:21, so the market's closed. So, you know, tomorrow, if you see an open tomorrow and it starts pushing away on, say, 10-minute bars, and the first one or two close at their highs, it's a good chance that you're going to get another push up. So be patient, but I don't think this is going to give you a whole lot of chance to get on board here. You know, I just see there's a strength, there's a, you know, a retrace, but it roared out of there. There's mini retrace there, wicks, strength, a wick there, which is normally weak, but look at the response, bang, up. So I see a lot of strength. I don't think this is going to give you a large opportunity to get long, and if it retraces, kind of, you know, probably in their kind of worst case scenario, and that's the 166 level. But, you know, tomorrow will tell. If it opens up above today's close and pushes higher, it might not come back here. So that's gold. It looks very bullish to me. Silver. So silver is the same thing. It's everything I've just said about gold basically applies to silver. And, you know, the silver ratios, they said silver to gold ratio is normally 7 or 8 historically, and we've got 17 compared to 17 compared to about 1700. So the ratio is like 100 to 1 instead of historically it's meant to have been about 8 to 1. So silver, I think, is very cheap. The fundamentals are all good for silver. It went down with the COVID stuff and it's pushed out of there very quickly. And this is the thing. It looks like this kind of looked like as it got to the previous high, it was like, okay, it's falling out of this trend. So anyone that's gone short here, like that's just drawn up trend lines and gone short, you know, price is pushing against them. So if it starts to push up here, which I think it's going to do, if it breaks out and pushes up, all those shorts are getting squeezed and they're adding to the buying. They're adding to the buying on this. So be careful. So, you know, this is my overall premise, up. So this is a leg up, second leg up, and then the consolidation, just like gold, except this hasn't pushed out yet. But, you know, this is kind of come up, and price is just hugging this upward trend line too, which is indicative of upward pressure. Also, you know, this is the worst selling candle here, and you had it left a wick, but price never, look where it opened the next day. Opened here, moved down a bit, pushed up, opened here, tried to push down, closed higher, it's pushing up. So expect silver to do what gold's done very shortly. So again, any sort of the same entry strategy as gold. If price, you know, regardless of where it opens, hopefully it either opens up or it opens here and starts to push higher. If you see, you know, in the opening, the first, you know, 1 or 2 or 3 10-minute bars are closing at their highs, that it's gonna go. It's on its way. And the other thing I like about silver, just looking, is look at in this consolidation, look at the volume trend. So expect another spike, as it starts to push out of here. Watch the volume increase. The other thing longer term is this. These are longer term trend lines. And of course, with the COVID stuff, it came back inside and it's pushed out of here. But this is another trend line here. So expect at least, I think it's going to go further than this. But if it pushes out of here, it's going to come up and test this trend line. But ultimately, my projection for this, that puts us past this high at 1834. So, I can see this on the chart, but in the context of what's happening, none of this should be a surprise to anybody. Like, if you've been following what they're doing to the money, none of this should be a surprise. And in fact, I'm surprised in a way that silver and gold haven't rallied quicker, sooner. Like gold, fundamentally, what would be the argument that gold shouldn't already be at an all-time high? So just wait for this to reload. So these are weekly bars now. And so, if this ends up being, if these end up being the lows, and I mean this and these end up being the lows prior to the next push up, this is still a relatively cheap place to get in. And I believe, not for chart reasons, but I think with what the government's doing, I think eventually, where no one expected the oil futures price to be negative. Like, I've studied economics and finance most of my life. That was never taught. It was never something that was expected or imagined, and it happened. While that's happened, I'm thinking that the same thing's going to happen on the other end. I think we're going to see gold and silver and oil prices higher than we've ever seen them before. I think ultimately there's going to be a reckoning for what the government has done with the currency. And to me, I think between me and the people I listen to, the government, what it's doing now is unprecedented. And to me, they're almost acting like they know that the currency system is done. The printing 10 trillion for this COVID shutdown, and the COVID shutdown was their making, and it was just really the pin that pricked the underlying problems that they've been creating for a long time. But given the amount of money printing that's been done since 07, 08, and now to be throwing 10 trillion, to me they're just acting like they know that the game's over, and they're just trying to get as much as they can out of it before they have to switch to something else. Something like their behavior is just, that's the only way that it explains that my brain can rationalize what they're doing now. So, getting back to the chart, if price is 17 now, if price eventually gets, I think it's going to go past this, but let's say price is at 47, does that look like a cheap entry? Absolutely. So don't look at this and think, oh, it's gone too far without me. I think silver is still very cheap. And I do a couple of things with silver. I hold silver for the long term. Actually, no, I do. I have option call debit spreads in gold. Like, I'm playing gold in the short term, but I'm holding both for the long term in different ways. So I've got a short term, but primarily my view on gold and silver is a long term one. But it's not, with these lows, and then this very, that this is the other thing I'll say about the silver price. When you're trading futures and you see a V spike, it's almost certainly, price is almost certainly going higher. Like that is the near term low. And by near term, I mean that price is going to come up and do things in here. Like this is the low. So to have these lows in a consolidation pattern, and then to have such a strong V spike, like, normally that wash will be here and it'll retest and stuff. When you have a V spike and it's in the context of those lows, I just don't think a chart can look any more bullish than the silver chart does right now. Like it's insane. It's not a more perfect setup. And really all you're seeing, these are weekly bars, all you're seeing there is a rest on the way up, I think. Look at that strength. Yeah, you've got the weakness down, but again, that weakness is only ever overridden by a V spike that looks like that. And so I really believe that you're gonna see some strength here, and then who knows after that, because that's, I can project on the chart, all right, here's areas of weakness halfway in between, but because of all this strength, I think you're gonna at least get a test of the 1960 high, and then after that, who knows, maybe a retest here and then a push out. But fundamentally, silver is coming back to 48. I'm certain of it. Between the money printing and the fact that the silver supply, the silver fundamentals in terms of how much is mined and how much is left to be mined, and the fact that when you use gold, you can reuse it. When you use silver, it's basically, spent. The fundamentals of silver are very good. So to me, this is just a free kick. So I know I'm going on a bit. My point about the silver chart is expect a breakout, and on the gold chart, the breakout's already happened, and it's very, it's early in that breakout, but the breakout has happened. Silver, it hasn't happened, but it's almost certainly going to. And gold is, there's no reason fundamentally why gold shouldn't already be past its previous all-time high. I think, I think people well, you could say they're waking up to it, but I can see it in the chart. Like gold was probably, should never have been this low. And then, people, there are enough people that know what's going on with the value of the dollar. And when you're looking at gold, you're looking at gold in US dollars, right? So if the value of the US dollar is falling, this price is rising. So the last thing I'll say, in terms of percentage return, I think silver will be a superior investment to gold. But, if you're heavy overweight silver and gold, it's safer to have, a large proportion in gold, because there's probably, I don't know, I was going to say there's less downside risk. Silver is going to be more stable simply because it's at, 1800, but gold is going to be more stable because, the prices are higher. It's going to be very unlikely that gold goes back to, say, 50 on this chart. It's not going to happen. But I think silver, even if silver only ever gets back to $48, it's at 16. Like the return proposition on silver is superior to gold. I know there's people projecting gold to get to 5 or 10,000, and it's probably will do that one day. But I think silver is going past 48. The same people talking about $5,000 gold are talking about like $500 silver and stuff like that. So, I think silver and gold are solid investments, and I think the timing for silver and gold is kind of right on. The only place that you could have done better was, maybe down here. And generally, I never expect a V spike like that, but when you get it, it's certainly bullish. So the thing again, looking at these charts, if silver is at 48, are you going to care whether you paid 16 or 11? I mean, sure, if you had a choice, but you know, it's giving you the last, well, I mean, there's going to be lots of places to get in, but it's, you know, it's fairly obvious what's happening here. So I don't want to keep going on and on. Both of those charts look very bullish to me. Silver in my mind is a free kick. Thanks for watching. Please like the video. Please subscribe to the channel. If you have any suggestions, like I should talk less or whatever, or you have any charts you'd like me to look at, please let me know in the comments, and I'll see you in the next video. Thank you.